I'm your host, Marian Walter, Head of Strategy here at Staking Rewards, and you're listening to the Staking Mondays podcast, where we provide actionable insights from the staking industry for investors, professionals, and beginners. My special guest this week is Felix Lutsch from Chorus One. Chorus One is a staking provider that offers staking rewards for more than 30 proof-of-stake networks. Chorus One also offers a range of tools and value-added services that enable users to manage their staked assets and to optimize staking rewards. Felix Lutsch is the Chief Commercial Officer of Chorus One, overseeing the day-to-day commercial activities of the company. He was already deeply involved in crypto during his studies. Back in 2017, he wrote his master's thesis on blockchain adoption in the finance industry, which finally led him to join Chorus One in 2018. Today, we are going to talk about Chorus One and their plans moving forward. Felix, welcome to the Stake Mondays. It's great to have you on the show.
Yeah, thanks, Marian. I'm super glad to be here and excited for this show.
Cool. So in the opening ceremony, or right after the opening ceremony of me, and then Mirko, our CEO at Staking Rewards in Lisbon, 8th of November, you actually gave like the first opening keynote as an external speaker, and you directly focused on an overview of the staking industry, and you also went deeper on liquid staking and especially MEV, maximal extractable value. And these are the three things I would like to zoom in a little bit more today. And starting maybe with MEV, why is it so important to you? Because maybe as a step back, Chorus One publishes a lot about liquid staking and MEV on your website, your blog, Dune Analytics. So tell me a little bit why you are focusing so much on this.
Yeah, definitely. I'm happy to. So, right, maybe for a bit of background, right, Chorus One, we're a staking provider, as already mentioned in the intro, that's been active in the ecosystem since 2018. And I would say we're very crypto native company. So aside from just running the infrastructure of having good uptime, having secure key management, we also focus a lot, since it's like such an emerging space, on kind of the problems that or like kind of the trends that are in the proof of stake ecosystem. And liquid stake and MEV kind of both are among. I'm receiving some. Sorry. So they are both like very important topics that kind of came up in the years when proof of stake matured. So right at the beginning, we just had even like delegated proof of stake was maybe a new invention. And then as decentralized finance came to the proof of stake world in general, right, with things like lending and DEXs, you started to realize that these staked assets that are locked up, there's a lot of like potential for them to be also used in this decentralized finance ecosystem. And I think the decentralized finance ecosystem overall just brought a lot more transactions and activity to the proof of stake space. And through that, there appear like new opportunities for new actors to make kind of money on those. And that's basically what maximally extractable value is, right? So there's kind of from these decentralized finance applications, there is value to be captured by actors in the ecosystem. And why does Chorus One focus on this? It's because in the end, we as validator are the ones proposing the blocks on these networks and kind of ordering the transactions. So we play an important part in this supply chain of MEV. And we think that for proof of stake networks in general, they need to kind of address this problem. So we see ourselves as kind of responsible for that too. And then also, since we're talking about values, kind of like extra revenues or rewards, and so we also want to share those with our delegators. And because of that, we're focusing a lot of it to both optimize the rewards for delegators, but also to help the networks to provide like sustainable ways of MEV extraction.
I think other staking providers would do the same, but what I like is that you are actually pushing above that, and with Chorus One actually educating or providing educational content and material for the market to better understand the whole thing. Is I think you are doing a very valuable job to the staking ecosystem there. So I don't know, maybe from as a throwback from the presentation you on the staking summit. Could you give us like the key takeaways for the current state of MEV, like staking ecosystem and MEV?
Right. Yeah. So like the core topic of that keynote, I think you could also watch the recording of it if you're interested after hearing this and you didn't yet, right? Was that essentially again, it goes back to this idea that MEV rewards can kind of make up other portion of the staking yield that we hadn't really considered in the past as much, where most of the staking yield nowadays comes from the token inflation and the sum of the transaction fees that you pay for gas on the network. But MEV, through the redistribution from validators or through other systems of MEV redistribution, can actually kind of enhance the staking yield as well. And I kind of looked a little bit at some data from live networks. So I kind of explained this core concept, and the key takeaway basically is, right, there is an opportunity there. And then I also went into a little bit the data. How much is it actually? It's not so much yet, right? It's like 5% maybe to 10% in like very mature networks, and much less in much newer networks where there's not so much activity yet. But you can generally see a trend that there is something there. And then that's what we're trying to clarify. What exactly is it? Who benefits in what ways? What are kind of solutions to help the redistribution or to minimize kind of negative externalities from MEV, since there's also like forms of it that are kind of bad for the users of the network. So like there's kind of different dimensions to that. But yeah, that's kind of the key insights from that. And yeah, we're still on the same mission, I would say.
Yeah, comparing Ethereum, Solana, and Osmosis, it's actually for Ethereum, which is the most mature proof of stake network, it's 54% of the staking rewards are comprised by token issuance, and then you have 34%, so roughly 1/3 is gas fees. Actually, the network with the highest gas fees, comprising the staking rewards, and then it's 12% coming from MEV. And if you compare that, so you have 12% MEV, 1/3 gas fees, and roughly 1/2 token issuance. And with Solana and Osmosis, it's quite different, right? And with most other long tail proof of stake assets as well, Solana has 90% token issuance. Osmosis staking rewards are comprised of 97% of token issuance, and then the rest is split between MEV and gas fees. So you can see there's a huge difference there. You could say that the more mature networks have a more sustainable revenue stream that are making up the staking rewards, which I find highly interesting. And another thing that I thought about, so this year I read Flash Boys, which is like it's a non-fiction book that storyfies a little bit the development of high frequency traders. And to me, MEV shares some similarities with high frequency trading, right? It's about right around the execution to insert your own trades there for sandwich attacks, for example. So judging from the development that we've seen in high frequency trading, do you have any views on the future of MEV? What are the next developments that you would anticipate going there if we would take high frequency trading as a proxy for that?
Yeah, I think the interesting thing with high frequency trading is that I think no one really thought about it in the same way that it's thought about in the crypto or decentralized ecosystem, that almost no one would think, well, this is something we need to mitigate, but everyone would kind of just think, how can I have the shortest distance to the execution side, right? How can I like lower my latency? How can I be a more profitable trader? And there's only like this IX, right, that kind of what the Flash Boys book is about, that they try to like kind of make a more fair system for the investors. Now, I think in crypto, we have a situation where there is much more focus from the broader ecosystem on this issue, and just much more resources going into like, first of all, recognizing that this is maybe a problem and trying to solve it in different ways. So I think we can see a little bit of a different trajectory to the like high frequency trading space there. I think on some elements, right, like there is a similar thing that, I think, for example, trying to like locate closer to some of, and I guess also the difference is that in a centralized exchange, in the traditional world, you generally have like one server region where like the main exchange is sitting. Now, if we're talking about proof of stake, actually it's sitting with these different validators already distributed around the world. So it's actually not even that easy to kind of locate close to some of them. There's obviously like kind of geographical zones where there's more servers, for example, in Europe or in Northern America. So if you're like a trader and you want to have this latency benefit, you might want to locate there and kind of make connections with validators to get in sooner. I think that is kind of a trajectory we saw a little bit on Solana, for example. But given how I was saying that we have much more eyes looking at this problem in crypto, I think there's also been like solutions that try to mitigate these advantages for some and build like systems that essentially enable everyone to participate in MEV, no matter how close you are, or like kind of take out these advantages a little bit and make it a bit more of a fair game. So right, like Flashbots was the first to kind of tackle that, in that sense that they're trying to build a system in between the people looking for the MEV opportunities and the ones that ultimately insert the transactions, the validators, and in that sense make it possible for more people to participate in this ecosystem. And that trend, I think, we have seen a lot also in other ecosystems. In addition to that, also like with other protocols, like even thinking about how can you mitigate some of the negative MEV things like sandwich attacks, what you mentioned, how can you kind of protect users from being exploited to a much greater extent than what is happening in the high frequency trading world. I wouldn't even know right now if IX is even like still a thing, or if people care about it, or it's just continuing in this kind of exploitative way. Probably it is. So I think, yeah, we're on a better trajectory in the crypto markets.
Interesting. And the second thing that Chorus One is very vocal about is liquid staking, and you are actively involved in liquid staking for Solana and Ethereum, working with Lido, and you are soon adding Osmo, Atom, and Juno with Quicksilver. So let's say entering the Cosmos ecosystem there as well. And you publish extensive reports on liquid staking. I think I've read your report back in 2020 when you published that one, which is a great primer to liquid staking there. So again, what brought you to liquid staking as a company? Why did you enter, and why are you so active there?
Yeah, right. It's very, I guess again, a similar kind of course of action where we were active in the ecosystem running this infrastructure. So you're very familiar with how the staking networks operate, how does the staking protocol work, and what are the limitations of that potentially. So and then we also saw the DeFi ecosystem coming along in Ethereum 2019, 2020. And it was clear that because staked assets are such a big like collateral type in these networks, because right, like most of the assets are staking tokens, and when you stake them, you kind of lock them up and you lose this liquidity but that is kind of potentially capital inefficient, or people will want to or the market will want to have liquidity on this, or there will be some instruments. I guess that's always a trend, I would say, in finance in general, that there will be like instruments to try to make like illiquid instruments liquid to some degree. And I think that exactly was kind of the trajectory we saw, and we were like, okay, thinking about how could proof of stake networks do that better. Ultimately, doing like this liquid staking research initially, and just looking at what's out there, and then bringing a lot of the projects together that were working kind of on similar trajectories. Now, yeah. So, and then we didn't end up like building our own protocol there, but we been working a lot with existing things like Lido and now Quicksilver to bring access to liquid staking to the market, and kind of the goal of liquid staking, right, is in the end to help the network stay decentralized, but also issue this liquid staking derivative that can be used in decentralized finance, which then it generally benefits from being more liquid, so having more adoption. And then from our perspective as a validator, if you just issue let's say a liquid staking derivative just for your validator, you will be kind of limited in how big that can get and how liquid that can get. So generally liquid staking protocols want to have like a lot of validators, right? And want to actually help decentralize the network. So we realized it early and basically decided to essentially participate in these liquid staking protocols and invest in that area. But it's a bit separate from the core staking business, which MEV feels a little bit more directly related. So we've kind of switched the focus to that a bit more over the last few months. Also, it's just a problem that feels like it's less solved, I think, than compared to liquid staking. So we also shifted the focus a bit more there overall.
And how does the cooperation between you and Lido look like? You already mentioned there was investment involved, and the other way around, Lido will also, when they receive assets that they need to stake, they delegate to validators, and I presume that Chorus One will also be one of them. Are there any other points of cooperation between you and Lido, or is that already it?
Yeah, there are some other things. So we have built the initial version of Lido on Solana. So we did build a smart contract there and received kind of like a grant for that and some revenue share. In the meantime, we have handed that back over to another team that does the maintenance, because we realized, well, it's a little bit separate from the staking business, but we definitely learned a lot and contributed back our expertise there, and are still also involved in maintaining it and operating nodes for both Lido on Ethereum, of course, and Solana. Lido is also, generally speaking, a DAO, right? So there is a lot of governance involved in having Lido operate, right? Be it about onboarding new node operators to the different networks, making decisions on what networks to support and kind of other things. And we're still involved also in that side of the DAO, like helping govern the Lido liquid staking ecosystem overall. But those are basically the dimensions here.
Now, I read on your website that you recently launched your Opus API, a chain-agnostic staking API for institutional clients. Could you walk us through that? What is it, and why did you launch it?
Yeah, for sure. Happy to. So, Opus API is basically the idea that you want to have a system that institutions can launch nodes with us easily and integrate with their existing systems. So the problem is probably most clear if you look at Ethereum, where every 32 ETH you would need to launch another validator when you're staking. Now for individual, that's obviously probably not happening that much. But if you're thinking about some institution or exchange or a bigger holder of ETH, they might accrue ETH over time. People deposit and want to stake it, and then you will have to launch a new validator, maybe every day a few. And we basically build a system to help automate that. So if you're an exchange or an institution that wants to offer staking to your clients and basically have some sort of staking button in your interface, then you can use our API to launch the validators automatically with us and also receive reporting around rewards and things like that from us. So that's the goal here. Ultimately, we also are building this out to have a UI interface, so you can launch validators with us and see your rewards and stuff like this there. The focus here is initially mostly on Ethereum, because that's where the need is the highest, and that's what most of the institutions, I think, now are first focused on, since these are players that are a little bit slower to adopt certain things, right? And what they care about first is like the bigger ecosystem. So basically Bitcoin and Ethereum, and Ethereum now with the withdrawals going live soon, also, and the merge having happened, just becomes more interested in staking. There's also still not that much ETH staked. So we felt that's the important move now, and been focusing on this. And in the future, we hope to kind of expand that to other networks to, help people participate in proof of stake essentially, and have like, interface and APIs for that.
Got it. And currently you are securing about 36 proof of stake chains. Some of them are quite small and innovative. So you're obviously playing the long tail of proof of stake validation, aiming for asymmetric upside. I would guess you could also call it bets. It's a similar pattern that I've seen across other validators. You have some of the tokens you hold and validate are the cash cows, and then you have a long tail of more smaller assets that you hold for the upside. And normally you would also not claim the rewards and sell them, but rather hold them. So to me, validators across several chains, they have a little bit a characteristic of a little bit of long only hedge funds in a way. Yeah. So as an image, you build a portfolio and you try to maximize the outcome there. But obviously it has a investment decision baked in there, involved there. What is your process? How do you decide which networks to validate? Because it is an investment decision that you're doing.
Yeah, exactly. Like, I think that generally holds true, this thesis for many of the validators. I think since we're pretty early in this ecosystem, everyone, obviously the core belief is this will grow. So most people treat it as a sort of like investment, and obviously onboard the networks that they believe will have some upside for them for various reasons. I think, we also do due diligence already based on the investment. So it's very similar here to like a normal investment due diligence that you would make, where you look at the network from different angles, looking at the team, the community, looking at kind of what the problem they're solving, if that's already addressed, if it's actually a problem, right? And if they're like set up to solve it. So just like kind of general due diligence in terms of the opportunity, but then the extra dimension that we probably look at that a normal VC might not look at in an investment is kind of the staking side, right? So looking at the economics that this network has for staking, the investors, because in the end we might also want delegations from the investors. So for some networks, there could be that we have already existing connections that would stake with us, so that makes it more interesting. Or maybe there's people that we want to get closer to and speak to. Or I think in general, right, the staking rewards are very attractive, or the staking system is attractive. Plus, ultimately, there's also like a more technical due diligence part that looks at how difficult is this for us to onboard this network and to maintain it. So there are certain kind of network architectures that may be easier, right? Like nowadays, a network that launches on the SDK framework, like the Cosmos SDK, will be much easier to operate for us than something else, because that's just a very much used framework to launch blockchains, and it works the same more or less for every of the chains. So since we're like so familiar with it and our systems are very well set up for that, and generally it's very mature, so also for the people like launching the chain, it's much smoother to do this. That also means we have to like invest less like technical resources to kind of onboard it and to maintain it, versus like something that's completely built from scratch, which often has like a lot of problems and just takes longer and more engineering hours. So because you have to get familiar with it, and maybe it's not as mature yet. So these are definitely factors that play into our like overall due diligence, and then we essentially take some sort of holistic view at all of it and decide whether we want to onboard the network or not. So that's essentially the process. We have like kind of a pipeline that these networks that we come across in different ways, or look at, kind of walk through, and then ultimately we'll onboard them when they kind of fit all the criteria that we want them to.
And as the chief commercial officer, are you also managing the treasury, or is this a separate role at Chorus One?
So we do this, the kind of like, there's some sort of committee in the company that manages the treasury on like a high level. I would say that, there's essentially some day-to-day activity that I'm not really involved in, but overall, the strategic decisions of what we do with our treasury, we have like sort of like a company internal team that looks at that, which comprises of kind of people from the investment venture side and just general leadership and finance side, and then looking together at our positions in the different networks, at our exposure in or like rewards in general, and kind of making decisions where should we maybe like deploy our own assets, but also what do we hold too much of, which assets should we sell, what do we keep, all these decisions, right? We just look at it on a frequent basis and adjust based on the market conditions too, or our changing view of the staking ecosystem.
So taking into account a mid to long-term vision of the market and the different tokens, you look at your portfolio and then you make decisions where to enlarge or decrease the actual principal that you've put in there, and also like for covering running expenses, for example, you would also need to make the decision which tokens or staking rewards you are selling. And is this changing from time to time, or are you always hodling the same tokens and selling the same tokens to let's say fund your operational costs?
Right. Yeah, I think that can differ. I think there's largely some that, like you already said earlier in this conversation, I guess some assets that make more or like just bigger, and then they are like naturally rather the ones that would be kind of sold, since that makes it easier. I think also it's a lot market condition dependent, I would say. So ideally we would sell more in the bull market, and then in a bear market we might like try to accumulate the rewards. I think so ideally we would like build like some sort of like cash buffer when the market is doing well, and then use that to pay for expenses and investments and everything, and then in a bear market try to accumulate through the staking commissions, but also through like redistributions of the portfolio, the ones that we believe in. Obviously that doesn't always work exactly like that, and we might still like sell a bit of the assets, but on a high level I would say that's kind of the strategy.
One of my last guests was Sergey from Everstake, and he said they keep 10% of all the profits that they make for having the buffer for the bear market. And actually he also shared that it was necessary now because they do have quite high payroll that they need to cover. I don't know, do you publish this information, or can you share this? Give us a little bit of insight, like benchmarks that you have. I think this is always very valuable for any listener here to see what other players in the market, I don't know what their benchmarks are.
Sure. I mean, for us, we look at it more in a like from a startup perspective, which was like, what your expenses are, like your burn rate of the salaries and other expenses that you have. And then we would just look that we have enough kind of burn rates to cover like 2-3 years of run rate, basically from our in cash, basically, or in cash equivalent. So like basically fiat somewhere on bank accounts, or maybe like a little bit of stable coin, and can still like earn a little bit of yield with those, but they are basically like cash. And so we would maintain that. And so that's, I think, mostly what we look at. But also when we do this, we assume we have no revenues, right? So we actually have like, with the revenues that we're still earning, if you would like sell it all and had to sell it all, it would be like much more runway. So in general, that's, I think, the core benchmark we have. And then it's more about the market conditions that we look at, how much we liquidate. There's not really like a percentage of the rewards or anything that we use. It's much more driven by those that burn rate statistic and general market conditions, I would say.
What other tasks do you have as a CCO of a staking provider? Could you give us like a role profile?
Yeah, for sure. I think, yeah, basically, we have 3 large, or like now almost 4 teams that work on the business side of it. Aside from just HR and operations that I'm not counting, it's like BD, marketing, research, and product. And essentially, I work with all these teams, so they have like people of their own in there. And I work with all these teams to make sure they work together and they like it's all aligned under our like basically overall company strategy and stuff we're working on, and helping to prioritize like different work streams. Especially also, I would say, the communication between engineering and the business side. So helping prioritize which networks we should onboard next, what kind of milestones are coming up for these networks. So, making sure we're there for the right things, and just generally keeping these different teams aligned, and also making hiring decisions, resourcing decisions on these things, on these teams. So that's probably most of it. I do a lot of our key ecosystem partnership development, let's say, myself still. Also, like, speaking with some people on the BD side, both on the network side and on the like staking investor side. So these are kind of the 2 elements in a staking provider, right? You have, on one hand, the networks or protocols that you validate, and on the other hand, you have token holders that want to stake the assets. And for some of those, I'm still also like involved directly myself, the very important ones, I would say.
Let's talk about your roadmap and looking ahead with Chorus One. What are your plans for the next 12 or maybe 24 months?
Yeah, very interesting question. Surviving? No, mostly like, I guess now we're, it's an interesting market, since a lot, the reality came back a bit from like last year of everything looking amazing, and, like mass adoption being around the corner. Now it's looking much more bleak, right? Interest going down again in the broader public. Also the image, I guess, of crypto being very impacted by like FTX and all these stories that were there. So we're very much, but the upside of that is there's obviously like a lot of building still going on in this market, and now you can see who's in it for the long run. Like some of the noise fades, and so we're really using this time to refine what is our offering, what are the networks that really matter, that are going to be there in the next cycle, and trying to like essentially divert resources and like kind of attention to those, but also like financially speaking. And so that's like the core focus. And then, given it's a more competitive environment now, and you had like more people enter, it's also the time to position yourself. Like, what's your differentiator as a staking provider? How do you compare to these others? And kind of refine that product a bit. So that's really our focus, to make sure we're building the right thing for our clients and the networks. So that's in the next 6 to 12 months on our end. It's this kind of institutional side of the business with this API and products around that should help like bring new people into crypto that haven't been there before. So kind of more focused on the kind of late adopters of the technology and institutions that don't have like that much expertise, but then also on the other side of the early adopters of the technology, like new networks that are coming out, and kind of this emerging field of MEV. So these are like the cutting edge things that were more involved, and then the institutional API is more a slower like product to onboard the institutions, which is like not as cutting edge, not as like exciting maybe as MEV or some of the newer networks. So we're kind of split between these two directions, and ultimately, right, in the next 12 months, launch this or like expand the API to also have an interface for Ethereum, and then hopefully add like 1-2 big networks or network ecosystems to it. I think that would be probably the main focus.
What is on your reading list? What are you taking into the holiday season?
Yeah, that's a very good question. I'm reading like a bunch of books in parallel. That's kind of how I generally operate. I've been reading a lot of like Stoic philosophy books. So still finishing like these letters from Seneca. And I also have like one sci-fi book, Der Schwarm, or The Swarm, I guess, in English, that I'm reading right now. Otherwise, generally, I read a lot of like nonfiction, to be honest, where mostly about different topics in like finance or economics or psychology or anything in that direction. But those two are kind of open right now.
What is your most favorite book of all times that you ever read?
Wow. Yeah, I think one of my favorite ones is probably like Thinking Fast and Slow from Daniel Kahneman and Amos Tversky, or I don't know exactly how you pronounce it. So because I think that was like very fundamentally describing the human psychology, especially in the markets where, like I guess I studied economics and business administration, and a lot of that is based on the economic theories of this like rational human that kind of maximizes their profit, but the real world looks very differently. And I think that book describes well, like based on like actual experiments, why this happens and kind of how it happens. So I think from that you can take a lot of lessons to other domains away from it. And it's especially important in crypto, where we're trying to like change these systems to be more sustainable, I would say. And so having the right mental model for that, I think, is very important, and had a lot of impact on me to like kind of reframe a lot of things in this kind of system 1, system 2 thinking. I don't know how familiar people are with these books, but is probably one of the most influential ones, I would say.
Yeah, it's being cited a lot, right? I think you can always go by the number of plugs or citations from people that you hear about the special book, and then it often is worthwhile to take a look at it. All right, closing it off here. What's the best way to follow you and Chorus One?
Yeah, I guess as many things in crypto, it's on Twitter. So @Chorus1 is the company handle where you can find our updates, and for me, it's @FelixLTS. We do also, if you're interested in reading more about our research, so I think that's kind of like one of the most interesting things you could do following us is going to Chorus One, and then you'll have in the top row like a button to the quarterly insights or like annual reports we're doing. It's like a mailing list that you can subscribe to, and you'll receive our research on a quarterly basis that we release publicly. And that has like, deep insights into the different network ecosystems we're part of, or like trends we're analyzing with a lot of data-driven statistics and basically like an inside look into our research. So I think that I would recommend anyone to check out.
Thank you, Felix, for being so generous with your time. We have been speaking with Felix, the CCO of Chorus One. If you enjoyed this conversation, check out our previous episodes on Spotify and YouTube, and subscribe to our channel for future episodes. Check out our Staking Industry Ecosystem Report 2021 that is going to come out this week. And follow me on Twitter. That's @Rokifehu, ROKIFEHU, and our team @Staking Rewards. I'm Marian Walter. You've been listening to the Staking Mondays podcast here on Staking Rewards. For Felix and the audience, thanks for tuning in.
Thanks for having me.